What is the NVIDIA stock worth? In today's video we are looking at a qualitative and quantitative approach to value NVIDIA, and I will actually perform a discounted cash flow analysis, so very traditional based discounted cash flow analysis on the pessimistic and an optimistic scenario. And to determine these two scenarios we will have to look at some qualitative information first. So I will just give you the value that I determined based on this valuation first, so you can already see is this for you. So in this approach, I value NVIDIA as to be $1,742 per share, which means that NVIDIA currently is 50% undervalued based on this valuation approach, and the compound annual growth rate for long-term investors would be at roughly 10% for the long term per year, and 30% per year in the very optimistic case. But in order to determine this, what does it mean pessimistic, what does it mean optimistic, we need to do a deep dive in NVIDIA. So let's start with the historic stock performance of NVIDIA. This is the last 10 years of stock price. You can see it has significantly appreciated. These are just the annual stock prices, annual snapshots of the stock price. But you see it goes up. And the compound annual growth rate basically was 69%. So this was, I believe, the fastest growing asset in the world, growing even faster than Bitcoin and other investment assets in the last 10 years. Maybe not Bitcoin. I'm actually not quite sure, but it's one of the fastest growing assets, the NVIDIA stock price. And the question is, will it continue? Will the stock continue to grow like this? And my quick answer is no. So it won't grow at 69%. It won't keep growing at 69%. So, but I have determined three cases: a pessimistic case, realistic case, optimistic case, right? And I have with some weighted probabilities. For each of the case, we determine a fair value based on discounted cash flow analysis. This is what we will do in this video later on. And yeah, if you sum this up, calculate the weighted sum, so the probability times the fair value, and then gives the expected value of this case, the value contribution to the overall valuation of the share, and you see there's this optimistic case that weighs really heavily. And I think this case we need to look at, because this is definitely important if you want to be on the right side of change, which is the mission of Finster. Good, so let's start with the question: what's the revenue total addressable market for AI training? And I have thought about this. I've thought about different ways to value NVIDIA, and I have done significant research in the last couple of months, I would say, diving into the data and diving into different ways to see NVIDIA. Because, for example, it's very easy for me to value Tesla because I know the company Tesla very well. So I know, I can even do napkin math valuations that show that Tesla is undervalued. But I didn't have such a good grasp for the NVIDIA stock. I knew, okay, the technology is very interesting and stuff, and they will revolutionize AI training and labor market, but I didn't exactly know how to value the company. Yeah, so this is what I think accomplished in this video. So let's dive right into it. Let's ask the question: what the labor share of the GDP is 60%, right? What is the total addressable market for AI training now? And you can see here on the right, you can see the graphic for different countries like Switzerland, Iceland, Netherlands, the US, and so what is the share of the gross domestic product GDP of total compensation for employees as a percentage of the GDP, right? GDP is all cumulative, all income in a country, or everything, all value that is exchanged. All value that is exchanged is also income of somebody. But not all income is earned by labor, right? There's other income, for example, capital income and other type of income. But what is collectively the share of the labor market is 60%. The global GDP is roughly 85 trillion. So this is a total revenue number per year. And 60% of that is the cost of labor, right? So companies pay currently 51 trillion US dollar to people, to human beings working, to what is called like human capital, right? But now more and more, the basic thesis is that AI will take over a growing share of this labor market. So part of this $51 trillion annual spending will go towards AI, right? And there are basically two tasks that need to be done. AI training, and you can think of AI training as human education. So if you train a doctor, say a human doctor, then you would put them through medical school and university and stuff, and yeah, you know all this information. If you train a coder, you would put them through a university as well. You will give them coding assignments. They read books and stuff, right? So there is some cost associated with training humans, and this is a training phase, a human education phase. And then you have AI inference. This is just having the model, having the brain of a human doctor or the brain of a human coder, and now just applying the knowledge of this person is basically similar to AI inference. So if you have trained an AI model, you can now put it to work, right? Ask it questions, let it do some work, right? Prompt your model with a large language model and stuff. So this is the AI inference phase. And AI training, so many say, like Chamath said or argues that AI inference will be 100 times larger than AI training. I also believe so. AI inference is basically, this is the global labor market, or a fraction of the global labor market, right? Inference is like labor. Think of it as labor. And AI training is like the global learning or education market, right? The education market is much smaller than the labor market, right? So there's some time you need to spend on training, but most of the time we need to spend on actually doing the work, actually applying our human models to the task at hand. And doing this will require the AI to run on computer chips, right? And now like this is a total addressable market, 51 trillion. More and more AI agents will now chip away of this cost of labor and will get fed with this dollars, which means in practice companies will spend a larger and larger percentage of their income, of their revenue, or I should say of their expenses, for AI agent. Specifically, where do those AI agents live? They live in the cloud or on data centers. More specifically, they live on AI chips, AI training and AI inference chips. So the AI chip market is basically where this money will go, or at least a fraction of this money will go, right? Of course, there are some other companies like OpenAI, like intermediary company, that do not produce the chips themselves, but OpenAI then, maybe this money goes to companies like OpenAI. Say if 50% of this goes to companies, to AI companies, in order to do the labor basically, right? So which means that globally we will pay like 25 trillion per year, or 26 trillion, or even 50 trillion. We could even pay more than that to AIs in the future as our economy grows. But let's just assume 50% goes to AI companies, 25 trillion. Now maybe half of that flows through these AI companies because they spend the money on AI training chips. And if you look at the expenses of AI companies like OpenAI, they basically spend money for AI training chips, or AI chips, I should say, training and inference chips, so data centers and energy, but mostly AI chips. So they spend money mostly with companies like NVIDIA. Now some proof. Here we have Sam Altman seeking trillions to fund chips for AI, according to a recent report. So he pitches investors to give him or his buddies 7 trillion in funding. And he knows the demand side of AI chips, right? He knows because he is spending all his money on OpenAI, on AI chips. Basically, OpenAI itself is not a profitable company. They spend all the money on AI chips. Similar Tesla, similar Google, similar similarly Meta. So all these big companies, all these AI companies, I should say, spend money mainly on AI chips because this is where the AIs live. This is actually where the inference and the training is performed. And if you think about the future TAM for AI chips, so based on this, like $7 trillion funding to fund a company idea, when Sam pitches this to potential investors, right? He wants 7 trillion, which means that those investors, they should expect pretty certain 15% annual return on investment, or they will not spend the 7 trillion. This is not even, company doesn't even exist yet. So 15% is probably even like very conservative. Maybe they want much more. But let's just assume, let's be on the conservative side. All numbers I used in this report, I think, are conservative estimations. So let's assume 15%. They want a 15% annual return on investment, which means that they want $1 trillion of annual profit, ultimately, maybe in 10 years or so. They want an annual $1 trillion of annual profit for spending 7 trillion now. Because otherwise they could simply invest in other companies themselves, right? They could invest in NVIDIA, Google, and so on. But they decide to spend their money, their investment money, with Sam Altman. So the pitch would be something like, I'm just talking about the pitch. I'm not even talking about the actual money spent. I'm not talking whether this deal goes through or not. I'm just talking about the pitch deck of Sam Altman. What did he pitch to potential investors? What is his view on the global AI market? And we need to determine this in order to determine the revenue, right? And so, which means that they would, like, assuming a 15% annual return on investment, they would have to make $1 trillion in profit per year, which would mean at least 2 trillion in revenue per year to make the profit from, right? With, let's say, a 50% net margin. Maybe even much more. Maybe they need 5 trillion in revenue, right, to get to this 1 trillion in profit. But at least, that's why the greater sign, that's why I say at least 2 trillion in revenue per year. Which means, assuming a 20% market share of this imaginary company Sam Altman wants to found, he needs to estimate that the AI chip market, total addressable market, is 10 trillion or more. This is revenue. So per year, companies will spend, according to Sam Altman's implicit assumptions, $10 trillion. So for some perspective, currently the AI chip market revenue is like 28 billion. 10 trillion would be 10,000 trillion. So I have done the exercise here. Like going over the next 10 years, if you assume a compound annual growth rate of 71%, you would go to this number. So implicitly, Sam Altman predicts or expects a 71% 10-year compound annual growth rate. So every year he predicts that revenue grows by 71%, revenue on AI chips. And we see early signs here already, right? So in the recent year, going from 2023 to 2024, the revenue increase by NVIDIA was 125%. So it was even larger than the 71% compound annual growth rate that he assumes here. Okay, this is only in the last year, and obviously in the year before there was very little revenue growth for NVIDIA. So let's see. I mean, we are in the early stage of this possible future. But in this video, I think we will shed some light on the questions: how big will this market be? So first of all, this slide I've shown it many times on Finster. It talks about the AI scaling laws. And the AI scaling laws means if you throw more compute at a problem, you increase the data size, and you increase the number of parameters of the model, of the machine learning model, then your performance, your performance, inference performance keeps improving. So all we need to do in order to improve, like here on the y-axis we see the loss. So the more compute we throw at a problem, the smaller the loss. The more data we throw at a problem, the smaller the loss, or the better the quality of the model, right? For example, if you have a self-driving car, you want a loss of near zero, right? You want very small amount of mistakes. So in order for it to drive better than human beings. So human beings have a certain loss, right? They do some mistakes while driving cars, but you want like the AI to drive, say, 10 times better than human. In order for this to happen, you need to reduce the loss. But you see, the loss reduces by just throwing more data, more parameters, and more compute at a certain problem. Which means that the AI chip demand, which is the compute, right? The AI chips, they run the compute. They are the hardware running the compute, grows exponentially. Why? Because we have two forces, data size, and data sizes increase exponentially. You can look it up. There are many statistics showing this for many decades. The data we are processing, the digitally available data, grows exponentially. Then you have the model sizes of the machine learning models, right? Like how many parameters are there in the neural network. They also increase exponentially. You can see this here on the bottom. The models, basically in all, like over time here on the x-axis, over time the number of parameters of the models, and on the y-axis we have a log scale, increases even super exponentially, right? Exponentially would be a straight line in this graph. So by having an exponentially increasing data and model sizes, the compute, which is basically like a multiplicative factor kind of the data and the model size, the compute also increases. It increases even faster than either data or model sizes, because the compute you need to perform to actually train a model is proportional to the data size times the number of parameters, because you need to throw the data through the parameters. Okay, so it is like, this is only a rough equation, but you get the big picture, right? The big picture is compute is growing exponentially. The demand for AI training and inference grows exponentially. And we can see this confirmed with NVIDIA's own slides. Here, this was what Jensen Huang, the CEO of NVIDIA, argued that they have seen a 1000x increase in the number of operations per second in 10 years, which is roughly like a 100% compound annual growth rate. How can you calculate this? 2 to the power of 10, like 10 years. If you double 10 times, you get a factor of 1024, right? Because this is like 2 to the power of 10, it's just 2024. So roughly 100% compound annual growth rate for the number of operations. But this, I mean, we cannot assume this as revenue growth, but this is the growth of the number of operations. So you see, this is a driving force of the growth of AI training market. But now, if you look at other charts, this is like more conservative venue, technavio.com. Like they published a report where they show that the compound annual growth rate in the AI chip market is like 61%. Now let's go back to Sam Altman's implicit assumption. He assumes like a 71%. Maybe he sees a bit more, right, than the people at technavio.com. But still, it's like the same, say, rough order of magnitude in growth rate. Here we have another picture. I found this on Reddit. To reach AGI, how large would the models need to be? And we can see, like here with GPT-2, it's very difficult to see actually. On the x-axis we see the years, and the y-axis we see the number of flops, the number of operations on a log scale. Which means that if you go one unit here on the y-axis, you actually double you 10x, not double, you 10x the number of operations. So, for example, going from GPT-1 to GPT-2 was like almost a 100x in the number of operations for training or compute. And going from GPT-2 to GPT-3 was more than a 100x. And then from GPT-3 to GPT-4 was again more like roughly a 100x. Now we will see even like maybe even 100x going from GPT-4 to say GPT-5, right? And actually we might see a 10,000x or something crazy, 100,000x, if you want to reach the human processing capabilities. I have recently done a video showing that the human brain collectively, we as humans, if you calculate the number of operations of our human brains, it's like at least 6, I don't even know the number, 6, 7, 8 or even more orders of magnitude more than currently all compute combined. So we are in the very beginning of this intelligence explosion. Here we see another like interesting nugget to show that we are just at the beginning, to show that, because now we have generative AI, right? Even assuming only a text-to-text model like a chatbot or so, we could still significantly increase the number of training, the training data and the compute, basically the number of operations we need to compute. But going from text to video or something like this will increase the computational demand by orders of magnitude. So more and more AI training chips. Somebody needs to produce and sell those AI training chips. They will be printed out in scales we cannot even imagine. Another indicator. NVIDIA now announced like a collaboration of say 8 humanoid robots, and Tesla is also working on the Optimus humanoid robot. So we will see billions of humanoid robots, right? One humanoid robot for every person on Earth. This is a mission. It's like Bill Gates' mission. One computer for every person on Earth, or the Steve Jobs' vision. One smartphone in your pocket for every person on Earth. And this will be done for humanoid robots as well. We are currently in this transitional phase. So we will see billions of humanoid robots on Earth doing the manual labor. And this is only the physical labor, not even the, say, digital or labor. Or like knowledge worker stuff that can be done by AI agents that are not embodied. This is only embodied AI. We need to train those models, update those models with huge amounts of visual and video and audio data, right? All these data sets, different, like very complex, very large, huge data sets. We need to throw through the training phase and the inference phase at runtime. Each of them has AI training chips inside, and we will have huge AGI models running in clouds somewhere that need massive amount of compute. Then going to self-driving cars. NVIDIA is working on a platform. Tesla is working on a platform. You can see, like on an X-Space discussion, Elon Musk with Peter Diamandis, Elon revealed that AI compute is increasing 10 times every 6 months. This is 10 times every 6 months. Again, 10 times in 6 months. This is 100 times in 1 year. This according to Elon Musk, one of the richest person on earth. So they know something, right? This is only for full self-driving. This is very compute hungry, full self-driving. But there are other applications. There are humanoid robots. There are text-to-video processing. And there are myriads of simulation applications, weather prediction and stock market prediction, and on and on and on, right? So based on these numbers, let's estimate a 10-year revenue growth. Based on the total addressable market, based on all these numbers I showed you. Elon Musk arguing like a 100x of AI compute demand increase annually. Let's assume a pessimistic situation where we grow the revenue for AI training only by 30% per year over the next 10 years. More realistic would be 50%, and maybe an optimistic would be 70%. 70% now, the optimistic case is aligned with Sam Altman's like first principle argument here, right? Here I argue that implicitly Sam Altman argues or expects a rough 71% 10-year compound annual growth rate of the AI chip market. And this is I base this on his seeking $7 trillion in AI training chips, right? So this would be the optimistic case would be Sam Altman. The more realistic, like 50%, I think realistic should be definitely in the books, right? This is already, I mean, I think this is done. We will see at least 50% compound annual growth rate. But the pessimistic case, we will also consider this. And in our weighted average stock price, basically, we will overweigh the pessimistic and realistic case, and even assume like a 50% probability of NVIDIA failing. Okay, so let's go in the pessimistic case first. I will show you what I did in the discounted cash flow analysis. Let's start with the pessimistic case. You know, a discounted cash flow analysis, here in gray we have seen the historic years and the revenue growth. So here the revenue in billions of US dollars and the growth rate. The last growth rate was like 125 or 125.88%. You can see a net margin of NVIDIA currently being 48%. Now I assume that the revenue here, the pessimistic case, grows only by 30% per year over the next 10 years. And after that, we will just have a steady state growth like of 4% forever, right? This is just like growing like the economy or something. I think even this is too bearish, right? Probably it will level off slightly. Maybe we will have 20% growth rate over time or so. But now let's assume this pessimistic case. We only look 10 years into the future, and then we assume like a steady growth rate of 4%. Now we assume a net margin not of 48%, what they have shown last year, but of 30%. This is, if you look at the net margin numbers in the last, say, 10 years or so, you see 30% is like a reasonable assumption. It's more on the safe side, I would say. This assumes more competition comes in. They will make only a 30% net margin. So the net income levels would grow from like 29 billion per year now in 2024 to say 251 trillion, so almost like a 10x net income in 10 years. And here we calculate the net present value, so we assume a cost of capital of 10%. So you could also invest your money, like as an investor, you could invest your money either with NVIDIA or with the S&P 500. If you would invest in the S&P 500, you would get a 10% of your cost of capital. This is what I assumed. You can assume lower numbers here. In this case, you would get higher valuation numbers, because if the cost of capital, so if you only put it in the bond market, you would get maybe a 4% or so. Now I can show you, if we make this 4%, now you see the total DCF valuation, which is just the sum of all these future cash flows discounted into the present, will be much higher. So this would mean the company is basically worth 11,397 billion US dollar. Okay, but we assume a 10% like the S&P 500, and we see the current market cap is like 2.1 trillion or 2,109 billion US dollars. And now doing this valuation, the pessimistic case, we will get a discounted cash flow valuation of 1,894 billion US dollars, or a per share valuation, I give it here at the bottom, of $757 per share. Now let's stock price. So let's look at the NVIDIA stock price. It's currently at 802 euros, right? So let's make it USD. Okay, it doesn't get this. Okay, so it's roughly like at 880. I think it's 880 overview. Okay, so the current stock price is like 880, and the per share valuation, the pessimistic case, would be $757 per share. Now in the realistic case, very quickly I assume a 50% revenue growth rate and maintain the same margins, right, of 30% net margin. And like in this case, we will get a per share valuation of $841. No, basically, no, this is the current market. What did it do here? N2? No, this is like, the per share valuation, a fair value of 841 per bucks, right? In the pessimistic case, we had a per share valuation of 757. And, okay, now I know the problem. Now we need to adjust the cost of capital to 10% in all three cases. We want to compare them against each other, right? 10% is our S&P 500, so we compare it with the S&P 500. And comparing it now, we get a per share valuation of $2,894 per share, right? And in an optimistic case, we assume a 70% annual growth rate. This is what implicitly Sam Altman assumes by seeking $7 trillion USD in funding for an AI chip company. Here we would get a total DCF valuation of 24 trillion. So this would be a huge company, and a per share valuation of $10,000 per share. And you can see in this case, in this very optimistic, very bullish case, you would see a PE, price earning, of the company, like it's just the net income. Like this would be a huge company. Like this company alone, this would be like the ultimate giga company, right? So we have these three cases: pessimistic case, realistic case, $2,800, $2,900 per share, and an optimistic case where the fair value, like the fair value now discounted to today, right? This would be today's fair value, $10,000 per share in the very optimistic case. So the market is currently arguing that this optimistic case is very, very unlikely to happen, right? They value NVIDIA to be an $800 per share company, not a $10,000 per share company. So the market would basically now agree with our pessimistic case, with a growth rate of only, so the revenue growth rate of only 30%. And I mean, you need to do the calculations yourself, right? You need to know like what is your assumed value here. So let's go for a reality check. Here in our fair value, in our optimistic case, we assumed that in a couple of years, so in 2032, in the year 2032, NVIDIA will actually get a net income of 1 trillion USD, or 1,062 billion USD. So it's a $1 trillion USD. So $1 trillion net income in 2032. This is our optimistic case. Is it even possible, or is it complete garbage, right? So I would say it's definitely possible. In the year 2023, today, 8 years before this point in time, even 9 years before this point in time, we would just have a 15x net income of Google or 10x net income of Apple. So this would argue that NVIDIA as a future AI company will be 10 times larger than Apple in terms of net income. Or another, like speaking differently, I think the last point is the strongest, but let's move on with this one first. 2 billion people in the world will directly or indirectly, via say other AI services such as OpenAI, pay like $80 per month for NVIDIA AI chips, and then 50% of that, like $40 per month or something, will be like say net income. And so NVIDIA will basically make this amount of money. So it's definitely possible, right? People spend like $80 per month for stuff, like for workers, right? For humanoid workers or caretakers. Some people, like my parents, pay $2,000 per month for somebody taking care of my grandmother, right? So it is definitely possible. Like this is nothing, like the world wouldn't have to change significantly. Like, I mean, of course there would be significant change, but so nothing complete crazy would happen if people paid $80 per month to NVIDIA directly or indirectly, right? And in other terms, we currently have a 50 trillion global human wages. So we spend 50 trillion USD for human wages. Eventually, like in 8 years or so, I think we most would agree that 20 trillion or more will go to AI agents or bots. And all of those will need NVIDIA chips. In the optimistic case, I not even argue that this is 100% sure. We will assign probabilities to these different scenarios. Next slide, right? But just assume that 10% of this amount that goes to AI agent goes to NVIDIA. Those AI agents, the companies providing AI agents, they run on chips. So 10% of their income will go to NVIDIA, and this will be the NVIDIA revenue. So like roughly 5% of that is NVIDIA profit, and we would go to the like if 5% of this NVIDIA profit, we will basically from 20 trillion, 5% is 1 trillion. So even in this case where only 20 trillion, so only a portion of the human wages go to AI agent, and only a small portion of that goes to NVIDIA profit, we could accomplish some, like our most optimistic scenario. So even the most optimistic scenario is possible. So all other scenarios obviously are also possible that are less optimistic. And here in the table we assume now a failure probability, because NVIDIA could fail, right? Even though it's a gigantic company with lots with a huge moat, very difficult to conquer. But it could still fail, right? So we assume a 10-year failure probability of 50%, in which case the fair value would be 0, right? If it fails, the fair value is 0. And so this is like a huge, very conservative. You assume with 50% likelihood it will fail. 20% likelihood it will reach its pessimistic scenario, like growing 30% for 10 years and then flattening off. 20% probability, the realistic case, where it grows like by 50% each year, and only a 10% optimistic case, like argued by Sam Altman, the industry insider, growing 70% per year. Now we get a fair value for each of those cases. We multiply the fair value with the probability of this happening, and this fair value is based on the DCF, discounted cash flow analysis, and a DCA, and the weighted outcome would be $1,742 per share, and currently the stock price is $800 per share, so you would get a 2x undervaluation. So currently NVIDIA, according to this analysis, is undervalued. Okay, I would love to hear your feedback. Please give me a comment. If you have other ideas, if you like the valuation, please give me a like, subscribe, join our free email newsletter. Just go to finxter.com, finxter.com. You can subscribe to our newsletter. We have lots and lots of free emails, so I send them sometimes on a daily basis, in some cases on a weekly basis, but I will keep you updated about the rapidly growing industry. I want to help you be on the right side of change. That's why I do all of that. I have had success myself, so I don't need to do this, but I do it because I'm passionate about change. And also check out the academy, our Finxter Academy, where we have like beginner-friendly AI practitioner courses, such as building multi-agent teams with prompt engineering, with LangGraph, with APIs. This is really beginner-friendly courses. We will teach you how to leverage AI to stay on top of things in our fast-growing space. And we add new and new courses all the time. If you only have to pay small fee to get access, annual access to all courses in the academy, and you can significantly boost your career success. And basically, if you get a channel member here on YouTube, you can also access all academy courses. So this is like for premium members only, but you can shortcut this by just becoming a YouTube channel member as well. From Tech Katana or Caesar role model, like this is the mid and end, like the mid level and the second level and the third level, you will get access to all academy courses, including downloadable course certificate for each of those courses. So check it out as well. Give me a like, subscribe to our channel, subscribe to our email newsletter, check out the Finxter Academy. Thanks for listening. I'm grateful for you to spend the time. I hope you got something out of it. NVIDIA still seems to be undervalued, but here, let me end with this note. If you invest now, because now it's like many people already see NVIDIA, you won't get this 69% compound annual growth rate over 10 years of all numbers. You will get maybe 10% in the pessimistic case, or 30% in the optimistic case, or something in between. Maybe there would be a hyper optimistic case, but I wouldn't bet on it. So this would be based on our evaluations we did, this would be the compound annual growth rate you can expect. And also know that this is not investment advice. Nothing I said in this video is investment advice. This is just education and entertainment, and education in the terms for like the stats and the thinking. I just share my own analysis of NVIDIA for my own investment decisions, and I decided to share it in this video. So don't take it as investment advice, do your own research. Thanks for listening and see you in the next video. Bye.